Good news and bad news on wages. They're climbing by not as much as they were. Good for policymakers and employers. We're not heading for a wage price spiral at least. Job website Seek says advertised salaries are up 4% in October compared to a year ago, up a little from September, but down from the peak of 4.4% in June. Now, the number is stronger than the official wages data, but that's because it's only for new hires. And pay growth over the year has been fastest for low-paid jobs. It was a fairly quiet day across markets, with the ringleader Wall Street closed for Thanksgiving overnight. Our market was up 1.3% for the week, but there was a big fall in electric car registrations in China, and that hit lithium stocks here. The Aussie dollar is still sitting in the high 67s, while the oil price continues to ease as Europe heads toward a $65 cap on Russian oil and as demand weakens, particularly in COVID China. Minutes from the Federal Reserve this week showed support for smaller rate rises. And the reason the Fed can contemplate this is growing evidence that inflation may have peaked. I'll add to the charts my learned colleague Alan Kohler had this week. Here's the leading indicator of global inflation pressures out of the New York Fed. It takes into account quite a laundry list of cost pressures, including shipping, energy and manufacturing prices. It's back to November 2020 levels. And let's talk turkey about Thanksgiving. The US is facing a bird shortage following an outbreak of bird flu. So the menu has had to change, and that's pushed the price of ham up to parity with bacon. That's finance.